So hi everybody, this is Paul Langham from Exact Trading. Welcome to this first introductory video regarding the momentum indicator. I just want to clear up, before we get going, just want to clear up a couple of points. I have spoken at quite some length about the indicator 421. There is a slightly earlier version which is 411, and that's the one that I'm actually going to put everybody into. That's the best one I feel for the particular type of trading we're trying to achieve, which is short-term momentum trading. So it's the 411. It runs exclusively on range bars, and here we have some range bars on the US dollar, Japanese yen, and these range bars have been created by the AZ Invest plugin, which details of which you will find also on the page. So the indicator, as you can see, it detects actually momentum breakout moves or potential moves. You can see, for example, here single arrows here detected a momentum breakout move which did not follow through, detected another one here, did not follow through, and then these ones which did follow through. What I'm going to do actually for the subscribers is to actually give them the best method of actually trading in terms of targets and stops, but I also want to give people some pointers now just to show how powerful I believe this indicator actually is, in terms of the fact that what we will be doing is always looking for a couple of signals together, because it's actually detecting a type of pulse, and as we know, we do get false breakouts. There's a pulse here which is detected, but this wouldn't be a trade because there is no second arrow. So where you get conglomeration of a couple of arrows together, these two here, these two here, these two here, that's the type of trade we will be taking. But where you get individual arrows like this one here, you can see very often they fail, and that's part of the problem with FX trading, is that frequently you get signals that fail on the sideways part, and what I'm doing is I'm detecting them, just detecting the signal once, but I'm also looking for the further follow through, and if I'm not getting that, I'm not actually drawing a new arrow. So this one, obviously, it would also be no trade, this is no trade, and this one here is also no trade, as this one here is also no trade. So anything where you see one arrow is a knockout, effectively that's a no trade, and what I'm looking for is two consecutive candles. So I'm just going to two consecutive arrows, just going to blow this one up a little bit, so you can see, for example, these two here, sorry, not those two, they're not together, these two here, these ones here, these two blue ones here, consecutive trades. I'll be getting into that trade based on the momentum breakout there, and I can tell you actually just by looking at that is actually quite a nice winning trade, and I'll be able to get you out right at the top, just up here. So that's all I just want to say on this particular video, because I just want to make some shorter videos to keep people a little bit, make it a little bit more interesting for people. And you can see, for example, just lastly, this is the 30th of May until the 2nd of July here. You can see there's quite a few trades, and this trades on multiple pairs. This will trade on any pair that you care to mention. Obviously, I always prefer the the majors from point of view of spread and the rest of it. There's some beautiful trades that come in here, and again, just going to have a look at this one here. So you've got a couple of these two candles at together here. We'll be getting into that trade, and off we'll go to the upside. We'll definitely have a winning trade there. We'll actually have a couple of winning trades on that. We'll have two winning trades there. So that's good. This one also will be a winning trade. Doesn't look like it, but it will be. And this one will be a very small losing trade, and this one will also be a winning trade. So I'm going to just stop the video there, just the opening video, and I'm going to go into some further details in the next videos on this page further down, so you can understand a little bit more about how it works, and have a look at it on some of the other pairs as well. So just to recap, this is a 20 pip range bar. You can see that's 197 there, down to about 177 at the bottom there, 178, 177, 177. So each one of these is 20 pips, and a range bar gets drawn when 20 pips has actually is taken place. Trading 20 pips traded has taken place. And what I like about the range bar, as opposed to some of the other well, not really alternatives, but some of the other Renkos, for example, these are real prices. These are not adjusted prices. They're not adjusted price candles. So this is actual market price, which is what I like about it. So you get in at the price that is drawn on the chart, and you get out obviously at the price. And none of it, obviously, nothing repaints, because 20 is 20. And it calculates 20 pips. The final thing, just going on a little bit longer than I should have done, is to say that obviously very clean, smooth trends is what we're looking for. It doesn't matter whether it's going up or down, very smooth trends. That is what we're looking for. An absence of wicks and tails is the type of thing, and this lends itself to the this type of trading very well. Okay, I'll be speaking to you just shortly on the next video.